What's going on, guys? Welcome back. Man, another wild week of tariffs. What do we think, man? It was a rough, rocky, up, down, 90-day pause, hold it here, run the tariffs there kind of week, and it was all over the place. Busy weekend for me. Spent a couple days in New Jersey for good buddies getting married, and we were out there hanging out, having a good time. So late start on Sunday evening. This is going to be a quicker one, but I really want to go over a lot of this tariff talk, a lot of the things that Trump is catching a lot of flack for. And I'm trying to figure it out. You're trying to figure it out. I spent a lot of time listening in to different things, thinking by myself. It was probably 6 hours of drive time solo where I'm just kind of going through all the different plays in my head. Like, we're doing this, but what's the outcome? And, just really trying to figure out what the next step is. So, in talking with some people that were, smarter than I am in a lot of different areas. You get to think, they've got their points, and then you listen to other things, and they've got their points as well. So I'm going to try to put my 2 cents together for what that's worth, and kind of come up with a thought right now as to what the tariffs are. Last time we were talking, hey, they're not reciprocal. They're not. They're not the same, right? It's not, this for that. It's, it's more proportional. That's really the way that I'm looking at it right now, is that it's a proportional proportional tariff compared to our trade deficit with different people around the world. Namely, I think we're going after China. I think all endpoints lead to China, right? We've definitely had trade discrepancies with other people. We were getting kind of taken advantage of, and I think what Trump is trying to do is basically say we are the number one consuming nation in our world, right? We're buying the most. We got 330 million people that are willing to spend and buy things from anywhere around the world. So that being said, we've got that large of a market, kind of think of it like Walmart. Walmart's got buying power because everyone buys from Walmart. But as a nation, we should have buying power as well, right? So we've been taken advantage of. We haven't really been on the same playing field. We're paying everyone around the world for everything that we're buying, but they're not, getting hit the same way that we're getting hit. And we've seen that for years. And, now it's kind of coming to fruition where we need to change, right? We've got, $32 trillion of debt. China owns, a good portion of that, and others around the world do as well. That was one of the things I was looking up, is how much of our bonds and such are owned by Americans, and it's only about a third, right? So, yes, all the treasury bonds and everything that gets sold, a lot of other municipalities and countries and investment funds buy them around the world. And it's not simply just us owning our debt, it's everyone else owning our debt with the, full faith and, however that line goes, full faith that the U.S. government will repay these loans back to these people. So we're paying so much in interest. So then you kind of think, why are we paying so much in interest? And then you look back at some of the things that Janet Yellen did, and some of the things that they refinanced at lower rates back, early 2020s, 21, 22, something like that. But then they also did that at a 30-day to a 1-year maturity. So we weren't really tied into those. So why is Trump going ahead and burying the markets and forcing people to want to buy more bonds? Well, they buy more bonds and the yield goes down. Hopefully we can potentially refi at some lower rates. So we saw that last week too. We went from like 4.5, we got down under 4, like 3.8, and then we kind of came back up to around 4%. So do we go ahead and refi for a longer term when the treasury yields drop that low? Can we crash the market enough to be able to save that much in interest? And, then on the other side, can we collect that much in tariffs to offset, the income tax, right? That's a big talk right now. So you've got the potential out there for, if we get to $750 million in tariffs collected, that, people that are earning under 150,000, that they wouldn't have to pay income tax. So even if we got to half of that, right? Even if we got to 375 million in tariffs, and we say, hey, look, if you make under 150,000, your income tax just got cut in half. I mean, that does so much for so many people. yes, we're paying a little bit more, but now that money can also be used to pay down national debt. So I think it's a double-edged sword. I think we're trying to do a lot of different things and put that money to play in different areas, right? So if we get rid of, you know, all the different taxes that we are paying on income, we also collect more on tariffs to pay down the national debt or wherever we use this money, right? We could do many different things with this money. We can rebuild our infrastructure or whatever that might be. So not necessarily do we get all these jobs right back right away, but if we do have manufacturing coming back into the country, I still believe very strongly that we're going to be pushing automation and AI, right? So if we're looking into those two things, and we want to be the best at those. So maybe we're not going to have manufacturing jobs, but hey, maybe we open up to the fact that we have the best electrical grid in the world, right? So now you've got, electrical engineering jobs, you've got line jobs where people are doing, collecting or connecting electricity. So now those are $100,000 jobs that are out there, and we're building up that infrastructure because we're going to lead in AI. We're going to lead in manufacturing with automation and robotics. So there's a lot of things that are connected through all these different things that are really come into play when I'm looking, where does the market go from here? I don't know that we're all rushing to get jobs sewing Nikes together. I don't know that that's the play. I think the play is that we want to have the strongest military and the strongest technology out there to basically own those markets, right? I think if we own those two things, I think that we're, kind of at the top again. So maybe that's the play. Maybe we're not just simply looking to tariff people into oblivion. Maybe we're just trying to get the power back in our favor. Understand that we were kind of taken advantage of for so long. And this is going to bring people back to the table, right? You've already seen it in several instances. And 20, 30, 40 different trading partners have already come to the table. And, we really need 80 or 90 trading partners to really come to the table, really look at this and say, how can I, as, XYZ country, sell my product to America, the largest buyer of consumer goods in the world? And I think that's got to be on a level playing field. So I think that's kind of where we're at. I was really struggling to figure out what the play is here. And I do think it is some sort of multifaceted type play where there's so many moving parts that it might be hard to see one end if you're looking at the other. But as you start to kind of bring it all together, it does have some sense to it. And a lot of people say that, Trump's been very capricious, as, we talked about this weekend. They'll know. But, being very random, not being very well thought out, but maybe it's almost like it's a game time decision, right? We're gonna throw this at them, and if they hit me back with C, I'm gonna hit them with play M or whatever, right? So it's not necessarily a perfected science, right? Maybe it's I've got an idea, I'm going to run with it, we're going to see where it goes, and right now that's going to be, hey, yeah, we're going to throw tariffs at everyone, and if you come to the table, yeah, I'm willing to talk, but I'm going to get you to the table. And hey, this country did this, I'm going to then lean on them to trade more with them. But I still think that we're going to hit China hard, right? I think that is the big other concern out there. They're a very well thought out economy. They've got a lot of different things going for them, but they've got some risks as well, right? They've got a population that could potentially decline by up to 50% in the next 30 years or 40 years. So they have that to contend with. Are they going to be able to maintain their power if they don't have enough people, building the product or manufacturing the things that they've so, comfortably really leaned on for so long? So where does that go? And then where can we, have some overlap? How can we all trade evenly and be equal trading partners? And yeah, so it's really a lot of different things. But yeah, so I'm looking at this week, right? We'll get back to the market. Sorry, that was a long tangent for me. I really just wanted to get my thoughts out there, right? So this is the rockiest week of my trading. And I mean, maybe COVID could have done something here. Maybe I'm just looking at the overall numbers and not the percentages. on the 8th, right? On the 8th, we were at 15.3, and then we got up to, where were we? 17.1. So yeah, we had this 10% crazy rally in the NASDAQ. Then we gave a little bit back on Thursday, and then we rolled up into the weekend, right? So this was this 90-day pause, right? This was the 90-day pause on Europe, I believe it was for, let me see if I can't get this current tariffs thing pulled up. We got Trump tariffs. China urges U.S. to completely cancel import taxes. We'll see what happens there. I think this is going to be an ongoing battle for quite some time. Here we go. We got, let me share this one instead. Let's take a look. We got USA Today charts show where tariffs stand now. The EU tariff remains at 10% baseline that took effect on April 5th. An additional 20% tariff on EU is paused, right? This was the big news. The fact that we are delaying, we're open to the fact that we're going to get some kind of traction going forward, and we're going to make some different moves here. And the fact that Trump is willing to hold off on these things has the market thinking, okay, maybe this is just this get everyone to the table. Maybe it's this kind of a head fake. Like, yeah, I'm going to throw the book at you, but I'm willing to meet in the middle somewhere. So, yeah, what do we got? We've got it is April 2nd announcement of tariffs on imports to all U.S. trading partners, driving stocks upward temporarily before they tumbled again as the White House confirmed 145% tariffs would be placed on goods from China. So yeah, we've got goods from USMCA, 25%, 10%, all goods for 90 days. And this is 145% on all goods. So yeah, China getting hit the hardest, 10% until these other people come to the table, 25% on USMCA. These are goods excluded for USMCA. So yeah, a lot of different things going into effect, and it's really difficult to figure out what is what and when it's going to change and how long it's going to be there, right? So I think a lot of it, as investors, we need to know, but there is a lot of noise out there. So I think, yeah, buy the dips in the stocks that you really know and love if you are comfortable with this storm that is happening, right? So are there deals? I definitely think that there are. I am getting more and more antsy to get paid from some of these snow contractors or snow companies that I push for, or actually some individual clients that still owe me some money as well that are dragging their feet, which is fun. But as this money comes in, I'm trying to redeploy this capital and get it invested, right? I don't know that all these things are going to stay down. And one that is not on the top 12 of the stocks that I'm buying this given year that we had originally talked about is going to be Alphabet. Google, GOOGL or GOOG, if you class A or class C, just depends on what you're getting. This stock is getting too cheap for me. We're on a trailing 12 months PE of a 19. We're at 157. Analyst research is what it is. I'm not too concerned with this. I'll just pull it up though. 30% of upside, give or take. But yeah, the price here is at that 19 handle is getting very attractive to me. So let's take a look at where we're at on Refinitiv. Let's see if we can pull this up here. Yeah, we got we're down 20% on 3 months. We're looking at that number up there. And we are in buy territory. Why am I so bullish on Google? Well, one of the things that really gets me with Google is the fact that everyone is still very noisy when it comes to ChatGPT. They think that AI is going to eat and destroy Google search. I don't think that it is going to do that. I mean, I definitely think that there could be a power shift. The market share could definitely swing towards AI or ChatGPT, but Google already has Gemini. They have Gemini into their browser. They have it on all their new phones, and it's a lot of different places, right? So I almost think that if Google can figure out search, if they can really have a different PR firm come out and say like, yeah, we've already got AI. You don't need to go to ChatGPT. We're already giving you Google AI right here, right now. Well, we're doing it. I think that changes a bit. Now, there is a lot of different things that people saying, yeah, well, advertising could slow down. If you're only using AI, you're going to that for, say, you're looking up something and you're getting that answer real quick and you're not getting the sponsored links. Now, this might just be my thinking, But when I'm going to Google, if I need to find a local contractor or a local pizza place, I'm not going to ChatGPT to find that. I'm going to Google to find those listings. If I'm looking like what does this word mean, maybe I would use, or write me this paper, maybe I'm using ChatGPT, but that isn't really a case where people would necessarily even really advertise. So I don't think that ChatGPT is going to be such advertising driven. And I think that if you're a small business owner or even a large business owner, I mean, Meta and Google are the two places that you want to be for advertising. And if you're not there, I mean, there's other options, obviously, but those are going to be the top two. So if you're counting on the ad revenue to remain, I still think that Google and Meta are the two best plays in town. So for me, I'm still bullish on the fact that Google will figure out advertising and AI. And I believe that ChatGPT isn't necessarily a threat to advertising. So that's kind of what I got there. And now they need to figure out how to monetize ChatGPT. So there's a lot of different things going on that I'm just not too sure that I'm as concerned about Google search going away. I'm just simply not that concerned about it. So we've got this annual revenue that's set to increase around 11% this year, 23% by the end of next year. We are looking at, what are the numbers? I'm kind of scrolling and talking at the same time, and here we go. We are at a 28% discount on trailing PE, right? We're looking at a trailing PE of 19, 5-year average is a 0.5, but forward, right? Forward is a 17 on Google. So you're going to look at some other consumer goods companies that are probably trading more rich on a forward PE compared to what Google is trading right here, right now. So for me, I'm starting to like the discount that I'm getting. I don't necessarily think that AI is going to destroy Google's search revenue from advertising. So I think that's still strong. YouTube is obviously number one. So I think they could probably do more with that. YouTube TV is gaining more and more traction. So there's a lot of different things that I think could point to the fact that Google is very cheap right now. We've got PEG ratio at 0.9. And this is kind of in the way for my own screen with what we've got here. Oh my gosh, I'm sorry, guys. I did it again. So we've got the forward PEG at 0.9. We've got the trailing PE up here at 19 and 5-year average of a 26. Forward over here is a 17.1 and a 5-year average is a 23. Sorry, I forgot to share the screen again. It's not the first time. I'm sure it won't be the last time. So yeah, this is what we got here. Yep. That's what I'm looking at there. Price of sales below their 5-year average. It's 2.5 compared to a 5-year average of a 2.9. Other stocks, right? If I'm looking at the list right now, I think I got to go Meta, Amazon, for the fact that they're probably more Amazon. If I had to pick one from the list, I'd go Amazon. Meta is more advertising driven. That's where their money comes from. If we do have a slowing economy, if we do have a recession, that is going to get hit. Amazon would still get hit, but they have so many different levers to pull that I think if their retail side of things slows down, AWS or healthcare or whatever else they are doing is going to fill in some of those gaps where Meta might have more volatility if we do end up in a recession. Tesla is still a battleground. NVIDIA, I still love NVIDIA, but again, they have one main product line, right? You're looking at chips, and if we don't have as much demand on AI, if that spending slows, they don't really have another pivot, right? They are looking at all the chips and all the things that they do that is kind of in one category. I know that their chips are used in many, many different applications, but if we stop buying those or if we find another way to do it cheaper, or say DeepSeek does work for less and they figure it out, or whatever the next news title is, I think that NVIDIA could be hit a little bit more. So if I have to look, I'm going for the most broad. I mean, Amazon basically is an ETF by itself, right? They're just in so many different businesses. If I'm looking at, let's go ahead and pull that up. Let's go ahead and take a look real quick at Amazon and compare. Let's compare Google and Amazon right now and see which one makes more sense. And I don't really care about the fact of what the analysts say. I know I've pulled it up before. Their trailing 12 months is at a 32.8. Let's look at Refinitiv here. Let's take a look. Let's see what we got. I'm going to share this tab instead this time, so I'm not leaving you guys in the dark. We're sitting at a 1.8 trillion market cap. Forward PE is at 28.9, but where do they normally trade? We are in a buy rating. We're up 77% on 5 years. Let's get down to some of this news. We've got price target 44% higher. Yeah, I told you I wasn't going to look at the analyst ratings, but a little bit more on Amazon here. We've got earnings still looking strong on the yearly. Annual revenue 9.3 and 20.3. I believe Google was 10.7 and 22, 23. Similar numbers there. We've got let's get down to what I'm trying to look at. Ooh, that is a steep discount. Trailing PE of 32, which Google was much cheaper, but it is a larger discount on Amazon, 55% off versus Google's like 30% off. Forward PE on Amazon, 28.9. 5-year average is a 63.2, so 54% discount there. Price to sales, similar discount to what Alphabet's was. And then forward PEG ratio, 1.6 to a comparative 2.0, I think. I believe Alphabet was 0.9 and 1.5 or something on the 5 year. So, I mean, similar story here. If you're looking at Amazon, it might have a bit more upside compared to the analysts. It's trading at a bit of a larger discount. I still think that Google is oversold for the fact of what they own. And now it's listening to me and telling me to ask Gemini. And yeah, there it is. There's the Google AI I was talking about. So yeah, we've got a bit larger of a discount on trailing PE when it comes to Amazon. But I believe that Google and the threat of being overrun by AI or ChatGPT on search, I think it's overblown. So truthfully, I really like both of them here. I'm not going to lie. I like both of them a lot. I mean, if you're looking at a strictly evaluation compared to the S&P, you're, a lot cheaper when it comes to Google, right? The S&P 500 is at a 25.5 on trailing and a 20 on forward. And Google is trading under that, where Amazon is trading over that, but still at a significant discount to where they historically trade. So if I had to buy one on valuation, I would lean towards Google. If I wanted, one that I believe can weather any storm, I would probably lean towards Amazon. So yeah, that's probably what I'm doing. Maybe I buy both of them tomorrow. I mean, I said Google, even though it's not on the list. Maybe I should just say Amazon because that's what I said I was going to buy this year. I'll do that. I'll buy Google for myself. I'll buy Amazon for the Let It Grow Investing Challenge. Link in the description. If you want to follow along, I try to post up all the buys that we do in the Facebook group. And I'd be certainly, be willing to let you guys see what we're doing over there. So that account, let's take a quick look. I want to take a quick peek and see what our Webull account is doing at this given point in time. And then I'm going to get out of here. It's been a long weekend. We are going to look at our Webull account. If you guys need those links, they are in the description to help get you started. I know if you put in like $500 on Webull right now, you get like 20 fractional shares for free. Pretty awesome deal. We're up 7% on this account. I think we got up to like 25% up, 27% up, something like that. So we're still up $2,300. Let's call it that. We're sitting at 34,159. And this is what is this? Is this year 3? Did we start in 22? I forget when we started. 22, 23, 24. Yeah, that makes sense. Yeah, we're this is 3.5 years in to build this this $34,000 account simply by buying, or adding $200 per week into an account. Kind of setting it and forgetting it. I did a couple sells here and there, but overall, it's been a buy and hold portfolio. We're weathering the storm. We're watching it come back down. And I think we're going to get some sort of big movement higher as tariff news kind of settles down, as people come back to the table. And, we get these tariffs really finalized and the trading partners are kind of all on the same page. That's my 2 cents. That's what I got for you guys today. Thank you very much for stopping by. Please make sure you like, subscribe, and share. I will catch you guys in the next one. Take care.